So I've become known for preaching about convertible term life insurance before we even get to whole life insurance and infinite banking, and why convertible term is so important. And I know you've started to create some content around that as well, Denzel. I think maybe it's an epiphany that both of us had around the same time. So you want to talk to our audience that, yeah, whole life insurance is great, but convertible term is amazing. And it's probably the first step before we even get to whole life insurance. You want to talk about the value of convertible term, Denzel, for anyone?
Oh yeah, absolutely. And I'll just kind of give y'all the visual here. And
I
this is
love the
something I do on
whiteboard.
my
I love
yeah.
whiteboards.
This is something I do on my videos all the time is I start with people's current financial situation, four major numbers, what's coming in, what's going out, what's your total debt, what's your cash flow. And that's our starting point. And what I've added into my practice when I'm coaching clients that are at that beginning point where I would put convertible term as one of the first conversations that I'm having with folks, or creating that window of opportunity to have that conversation.
Right.
And I think
It's not,
a
I
lot
just
of
want to point out,
people.
like, it's not term versus whole life, just like it's not HELOC versus
Correct.
mortgage, right? It ends up being term and whole life. These two are not competing with each other. They're complementary.
Yes. So most people I work with have this huge block in front of them, which is the debt.
Mhm.
And then they're searching for the different strategies that exist. So that could be velocity banking, that could be infinite banking. Maybe
Mhm.
they're trying to invest, make money, then pay off debt.
Right. In some
And
cases, they're
there's
just looking for a get out of jail free card, right?
correct. Maybe they're even looking at, bankruptcy,
Mhm.
right? Debt restructure, debt settlements. They're just
Mhm.
looking for help. Okay. And I'm now in my practice, what I'm looking at is folks that are at least positive cash flow. I would say even as little as $300 to $500 a month or less, right around this range. I already know when it comes to whole life insurance that, and when it comes to investing, that these are going to be later conversations for sure.
Mhm.
And if I'm dealing with someone that has around this cash flow amount, they most likely have anywhere from 30 to upwards of 50% of their income is going to debt payments. That's one of the first areas. And from a business standpoint, if someone is generating income through a business, then the next big area is probably taxes, where we can essentially redirect cash flow. And normally, in my practice, as you know, as you've seen on my YouTube, my goal often, a lot of my case studies have to do with redirecting cash flow, recapturing cash flow, or um, creating more cash flow by using different debt elimination strategies. And then we take that cash flow and throw it towards more debt until we get to a very healthy cash flow position. I like to be around 1,500, 1,000 or more, 1,000, 1,500 or more comfortably, conservatively, to now have the conversation about whole life, being able to save money in bigger bulks in that regard. But I've now been like taking more steps back to say, okay, how can I serve that person that's in the $300 to $500 cash flow range or less, business owner or not a business owner, and start showing them the power of life insurance, specifically convertible term insurance, how we can get you something in the beginning and making it worth their while, showing them how valuable it is to potentially go down in cash flow slightly. So if it's a $50 a month term payment or a $75 a month or even a $100 a month convertible term payment, to actually go down in cash flow and not send all of your cash flow toward debt elimination because of all of these living benefits that you can obtain with convertible term, and then the long-term opportunity to convert that to a permanent asset, which can then have 20 other uses later on, like a multitude of uses that you would no longer get with a term because it's temporary. It's for a period of time.
Right.
So
Plus,
that's where I'm at right now, where I'm saying part of our four major numbers discussion, we're also having a discussion on how much insurance do you have, just like
mhm,
how much car insurance do you pay, and how much homeowners
mhm,
insurance, and how much health insurance do you have? How much coverage do you have on your life if you lose your life in the process of doing these financial strategies that you're looking to implement?
mhm.
That what happens if you do get chronically ill, terminally ill, or you pass away too soon to receive the full fruit of your financial strategy? There's this massive death benefit that,
Or what if you become uninsurable?
or what if
Maybe
you become
maybe I have
uninsurable
a bout
altogether?
with cancer and I survive, I get back to work, but now I can no longer get life insurance. So now whole life insurance and infinite banking are closed off to me. Or maybe I'm just less healthy than I once was. So now when I apply, I get a
Correct.
standard rate or a rated policy instead of that preferred plus rating I would have gotten. So convertible term locks in your insurability at your current health rating. It gives you a guaranteed purchase option for the future, and it secures your full human life value. Human life value is something that most people are not aware of. If you ask them what their house is worth, they probably have a rough idea what their house is worth, what their car
Hmm.
is worth. They probably have a rough idea of that. What is your life worth from an economic perspective, right? Um,
Yeah.
that's really important. And basically saying, like, if you die, what is the financial loss to your family, to your children, to your spouse, whoever it is? Most people don't even know that. And I think, Denzel, one of the most valuable things we can do as agents is simply to tell our clients and our prospects what their human life value is because they do not know. And then
Hmm.
explain to them why it's important to secure your full human life value. You fully insure your house, you fully insure your car.
Yep.
Don't you think you should fully insure your life? And I'm not talking about whole life insurance. We're just talking about term here, right? So what you're doing is you're securing your future net worth. It's basically a three-step process. Step one is you secure your full human life value with convertible term. Let's just say $3 million. You take out a $3 million convertible term. And by the way, I did a whole video. There's a whole bunch of nuance around what type of convertible term you're getting. So understand, we're talking about very specific types of policies here, not just any convertible term. There's a lot of nuance to that, which we can't get into in this video. Next, you make it permanent by converting it. So now that death benefit is permanent, it will be paid out. And then step three is eventually that death benefit becomes liquid and available to you as it converts to cash value. So it's a three-step process, but step one, you already won the game, man. When you take out a $3 million convertible term policy, you know you're going to be worth 3 million at some point in the future. You already won. The result is already locked in, right?
Let me ask you to that, is that just an example you're giving 3 million, or is that a a number you start with depending on
It's
how
just an
much?
example. It's just an
It's just an
example.
example.
So
Okay, good, good, good.
the
Got
insurance company is
it. Yeah.
the actual. So what's your human life value, right? Instead of saying, well, how much death benefit do I need? Back up a step. Don't reinvent the wheel. The experts at determining your human life value, it's not you, it's not me, it's not Denzel Rodriguez, it's the actuaries at the life insurance company. This is what they do for a living. They're professionals at it. So don't reinvent the wheel. Let them tell you, right? You talk with me and I will tell you based on the insurance carrier what your human life value is. And it's probably a larger number than you think. Probably a larger number than you think. And the cost for acquiring it is probably less than you think. Convertible term is not that expensive.
I agree. I just wrote one on my older sister, and we were able to get 750,000 under 100 bucks a month, just under 100 bucks. It was like 89, 90, something to that effect. And don't want to give away her age, but later 30s. So
Mhm,
that's really good. And this is someone that has, has had some health challenges in the past. And so I was able she was able to improve her health, and I have clients that do this as well, where they're like, Denzel, I might, I'm overweight. I have this issue. I have that. And what I've learned, which is really interesting in the health space, having the conversation about life insurance could potentially be a very motivating factor for that person to start eating better, exercising more, wanting to get healthier so that they can access these financial assets that can not only change their life, but improve the next generation and fulfill
Absolutely.
on leaving an inheritance for their children's children. Like, I
Absolutely.
never knew talking about life insurance would be a motivating factor for someone to improve their health.
Yeah. Yeah, absolutely. I've seen
So
it
there
because
might be some kind of cool collaborations down the line. Us collaborating with some
with
personal
health
trainers and
insurance.
some
Yeah.
health influencers out there to be like, hey, you might want to use this as a talking point because we're seeing people genuinely improving their health just so that they can get the best rating so that can become insurable. So those of
And
you that may have applied for life insurance and let's say you got a poor rating or you're uninsurable, don't give up. Like, you could go on a 30, 90-day cleanse, body reset, a fast, and you can retest your blood markers over a short period of time, not that long, and get a better health rating,
and by the
or at the
way,
very least become insurable.
just with convertible terms, so you could, let's say you get the standard rate today, you put that policy in force, and then you lose 30 pounds, you can get that rate improved without risking your current policy. So if you
Okay,
say, "Hey, I
good to
want to
know.
lose 30 pounds and then apply," I say, "No, let's put the policy in force today." So now we have that locked in, so you can't get any worse. And then once you've lost the weight, once you've quit smoking, once you've gotten past your type 2 diabetes or whatever, then we can get a rate improvement, and now we're doing it without the risk of you being declined. Because even if they find out you have cancer at that point, they can't change what they've already given you, but they can get it improved, right?
Correct. I just learned about that a couple months ago, and I've been in the business almost 7 years now. And this applies
Wow.
to whole life policies as well. Like,
Yep.
if you got a standard rating and you want to retest, my mentor Steve Parisi was telling me he had a client go through underwriting again after a few years of having the policy, and his cash value jumped because he was able to get a better rating, even though he was older. At that point, it must have been like 4 years after putting the policy in place, something to that effect. So I was like,
Yep.
You tell me this now after so many years. I've been in the bit. I'm like, I got to go through all my client lists and just see if anyone got a poor
Absolutely.
rating,
I'm
in the
always
past.
looking at it. We just did that recently. We just applied for improvement. A guy got the standard rating and he lost like 60 pounds,
Oh
and
wow, that's
just
awesome.
went through the application to get him approved and get him another new policy. Probably the most common you see there is people who quit smoking. So they get approved with the tobacco rating. And then after they quit smoking and it's been at least 12 months, depends on the carrier, then you can apply, get that rating removed. So
When it comes to smokers, do you know what the time is? It 5 years or 10 years?
it depends on the insurance company. So
Okay.
usually after 12 months, you can get standard non tobacco.
Oh
And
wow.
then after 2 to 5 years, you could get a preferred non-tobacco rating after it's been long enough. But some carriers are different. In fact, I have my preferred carrier. I've gone with an alternate carrier who's still really good more than once because they're a little more lenient with smoking. So I have people who smoked casually somewhat recently and they were a bit more lenient on that. And so we went with that carrier because they were going to give them a preferred rating, whereas my preferred carrier will only give them standard. So yeah, there's a lot of nuance there. I did a video on it, which I'll post. There's so many nuances to convertible term. A lot of people who don't understand life insurance, whether they be critics or just laymen, they just see, oh, you got $1 million worth of term. Well, there's so much nuance even to term. So as an example, we talk about convertible term. Well, the question is, what's it convertible to? If it's not convertible to a competitive whole life product, then that conversion privilege is not worth much. So it has to
Correct.
be with the right agent who
The
really
right
knows what
company.
he's doing. It has to be
Mhm.
with the right company. And that means not just a carrier that has a competitive whole life product, but a carrier that does not restrict conversions. There are carriers
Correct.
out there that sell convertible term life insurance policies, and they have great whole life policies, but I would not recommend doing convertible term with them because if and when you go to convert it, they do not allow you to design that policy for infinite banking. They don't allow you to design it the way we would typically design it. So you got to be
Right,
careful.
because
You
of
got to be
the
working with an agent who really knows all of these nuances. Okay.
yeah, is off the top of your head or just from your experience now, is there your top preferred companies where you're like,
Yes.
"These are my favorite,"
I don't
that
ever
if
name
this
specific yeah, I don't ever name specific insurance companies for a lot of very good reasons, but I'll say there is one, in my opinion, that is the best for convertible term, but there's a handful that are really good, meaning they have a competitive whole life product and they don't limit the conversion. So when you convert it, you can convert it to a whole life product designed any way that you want. Okay.
Mhm,
But there's even some nuance there. Okay. Because you might have $2 million of convertible term and think I can convert that to a $2 million whole life product. Not the way we design it, because the
correct.
way we design it, the total underwriting amount is going to be more than 2 million, even if the starting death benefit is 2 million, because that death benefit grows over time. So the
Correct.
insurance carrier actually is going to underwrite you for more than 2 million. So there's even more nuance there. What about the living benefits that come with it? The chronic illness rider, things like that. What length
Mhm,
of term is it? 10-year, 15-year, 20-year, 30-year? You can ladder term policies. What would be the reason for doing that? Do you want to stick on a child term rider, right? Do you want to stick on disability waiver premium or a guaranteed purchase option? There's so many different nuances even to term policies. And when we speak with a client, we're not you don't have to know all these complexities yourself. We'll handle them, but just be aware that there's a lot of pitfalls and mines that we are navigating on our side where you as a client are not going to see that, but I want you to be aware of the value that we're providing. Because I see, unfortunately, you've probably seen this yourself, where you'll go talk to a client, they already have a financial advisor,
mhm.
and they have more money in assets under management with that advisor than they have in total death benefit. That's ridiculous.
That's
That is
off.
totally irresponsible. Where you have $1 million in assets under management with this financial advisor and just a dinky little $500,000 term policy. That's ridiculous. That is absolutely ridiculous.
And the reality is for I'd say the vast majority of average American income salaries, 80 to 100K or less, when you look at their portfolios that are maybe only two, three, 400,000 altogether, and they're in their mid 50s, approaching retirement, them being able to get double, triple that in death benefit for, as you mentioned earlier, for not as much as you think, that is a very well balanced portfolio because now, if those dollars were in taxable vehicles or not, the kids don't have to sell those assets to
Right,
take care of things after death. They
right,
can just use a tax free income death benefit to handle everything, keep the assets, allow them to keep multiplying, and then use it as it was intended for, as income, not
right.
necessarily to cover unexpected
To liquidate.
large correct expenses at that time
Yeah,
and point.
it's harkening back to a previous conversation that we had, Denzel, is having that life insurance in place allows you to leave your investments alone and let them keep earning for you. So
Yes.
these financial advisors should be working with us rather than fighting against us. They don't seem to realize that when you have your clients properly insured with life insurance and maybe long-term care or disability or critical insurance, it protects those assets under management. So your clients don't
Yeah.
have to raid those when it's not an if, it's a when
Right.
some negative financial event happens. You and I both know, Denzel, we've been in the business long enough. Something negative will happen. Over the next 10
Yeah.
years, some unexpected negative event will happen and you'll all of a sudden need 10, 20, 30, 40, $50,000 at the drop of a hat. It will happen. It will happen.
I would argue that financial advisors that would team up with us or collaborate with us in the long term will make more money in their practice, less work. They'll make more money, less work, and their money will be more passive if you've got assets under management that people are not liquidating in large chunks to handle these other things. Whereas insurance can handle those other unexpected things, your clients are going to keep their money with you longer throughout retirement, especially as people living much longer now. So I think a lot of financial advisors are only planning to retirement. They're not having the conversation of this sequencing of returns and distribution
Distribution.
rate, and they're just not. Life insurance is a great way for them to, for their clients to hold on to their assets, and that's more money in your pocket because those are the management fees, and you're able to hold those assets and make more money for your clients because your client's not going to be too concerned about pulling large amounts out for certain things, right? So it's just like, hopefully we can, with the non-traditional way of getting material out there now via YouTube and the social media platforms, that the customers are being their own advocates for when they're in that conversation with their advisor. They're informing them of what they want, and the advisor now has to serve, not just
Yeah,
push
and
their own agenda.
yeah, and I love that word, serve, Denzel.